Hello.
Hey, buddy, how are you?
Hi.
How's everything going?
Yeah, pretty good. Pretty
Yeah,
good. Get a
awesome. So did you want to like share your like be able to share the PowerPoint?
Yeah.
Right, and to do the recording. Thanks, Camille, for reminding me to do that. Okay, so I'll just show our startup page. So, welcome to our Smart Directors series for July, and we're talking about your investment schedules. So, we've got an amazing tax depreciation expert with us today, Maddie Lardner, and yeah, so I just want to introduce Maddie to you all. So I'll stop sharing, and then hi Maddie, welcome,
Hello.
welcome to our Smart Director series. So so tell me all about you. Like, tell me why people that are here today, why it's going to be really valuable for them, and
Okay,
a
yeah,
little bit about you. Mm.
100%. So I've been working with BMT for it's about 5.5 years now. So it started just before COVID and got into it in the nitty-gritty of lockdown and things like that. Um, and yeah, I sort of go and talk with different people about how depreciation works and the benefits. I do a lot of hands-on experience with property managers, property professionals, accountants, and such to sort of explain the benefit, and even directly with landlords as well at different places, be it like an investor night or at different gatherings and things like that. But
Mm-hmm.
I also work in the office and help people through the process and guide them along and kind of that middleman or talk person for them between them and the quantity surveyor.
Awesome, awesome, awesome. So, how long you been doing this for?
Yeah, about 5.5 years now. Yeah.
Yeah, cool. And so what is property tax depreciation? So why are we having this conversation?
No, 100%. Great question. So depreciation on an investment property, it's similar to say if you have a car for work purposes, you might pay or claim on the petrol or the mileage for a car that you use for work. It's a similar concept, but for an investment property. So what it is, yeah, claiming upon that wear and tear as a tax deduction to help get to lower your taxable income and therefore get a better taxable return.
Mm, cool. So so this is mainly residential properties, or can it also be commercial properties that we're
Yeah, it's a
talking about?
residential and commercial. So commercial properties are something that we do. And for commercial, it can be both for the like owner of the building and also the tenant.
Mm-hmm.
Both can get the depreciation schedule completed.
Cool. So, why on earth is it important? Like, tell me why this magic tax depreciation thing for investment properties. Why is it important for our investors to know about it? And what do you find as well? The second part of the question: what do you find as well that a lot of investors don't actually understand about the property depreciation mechanism?
Yeah, 100%. So the importance is, and well, I guess in a way is that I've yet to find a person who likes paying more tax. Getting the depreciation schedule is a great way to pay less tax,
Mm-hmm.
which is something everyone wants to do.
Mm-hmm.
Um, and why something that sort of like people might not be aware of. We have a lot of people that might come in with their and talk with us who have a second-hand property, or they think a property is not worth it because it's over 5 years old. So it's a common misconception that a second-hand property or a property that's not brand new isn't worth getting the depreciation schedule for. It's always worth asking the question because, as my mum always told me, the worst someone can say is no. Um,
Yes.
so we might as well ask the question and get a free estimate for them. Uh, yeah, I'd say to do with like the age of the property is probably a big misconception with people.
Yeah, cool. And also that if it's secondhand,
Mhm.
you can't get access, but you're saying that
You
maybe they can.
100%, you 100% can. Yeah.
Yeah, that's amazing. That's so
Mm.
cool. So so tell me more about so the overall process is if an investor has a new property or new to them property and they've never done the tax depreciation schedules, what is the actual process for that?
Yeah, so
So,
well, yeah, I guess they're lovely property managers and such. We get in
mm,
touch and tell them, it's something that's going to be beneficial. We can always get that free estimate. So then
mm,
they get in touch with BMT. We'd get
mm,
a couple of details to start off with, things like the address of the property, confirm things like how long they've owned it, if they've done some additions and changes. Some of the stuff that we can confirm sort of later down the line as we complete the report. But we get a couple of details to give that quote and estimate to them.
mm,
Um, and then once we get the go ahead for them, we go out and we do the on-site inspection. We do the
mm,
inspection. Once that's completed, the report's then ready within about a week or so.
mm.
And then they can start claiming.
And
Straight.
the on so the on-site inspection, that's with a quantity surveyor.
Yeah, so that's like
Yeah,
with a
so what's
train.
that? Like
Yeah,
who's that person and like what do they do and
yeah.
why is their job so important in this process?
Yeah, the quantity surveyor is important because the quantity surveyor is a construction cost specialist, so they can
Mm-hmm,
estimate the cost of construction. So the depreciation is based on the construction cost of the property or the estimated construction cost,
mm-hmm,
particularly with, like I was saying, secondhand properties, even if you've purchased something brand new off the plan or it's a house and land package, so you don't have a
mm-hmm,
split. You might not know what the construction cost is for your property. That's where the quantity surveyor comes in. So as part of doing the inspection, that gives them all the data that they can use to then estimate the cost of construction. They're
mm-hmm.
actually one of the few professions in Australia, or the only profession in Australia that's able to estimate the cost of construction where it's not known. So that's why it's like
Wow.
the quantity surveyor rather than say like an accountant or a solicitor
Mm.
such that does the schedule. Yeah.
Yeah, yeah. And I've seen like other clients that have come to us and they've not used a quantity surveyor. The accountant's done it. And I've gone, oh no, don't do that. Let's get a proper schedule. And why, like, so you know why, but can you tell our people that are on this webinar, like why having just their accountant to do a depreciation schedule could be a little bit detrimental?
Sure. So, well, one of the things is, like it's like outlined in the actual like ATO's like tax rules. It's to be technical 97-25. That it's a quantity surveyor, not an accountant, solicitor, real estate agent, all the above that does the depreciation schedule because one, the ATO says so, and if the ATO says something, we generally listen to it.
Yes.
And two, because yeah, they're qualified to estimate the cost of construction. If an accountant has the full breakdown of the construction cost of the property, then they might be willing to get the schedule to organize the schedule that way. However, we do often find that based on what the charge is per hour, it's still better off to get that one-off cost done through like a quantity surveyor rather than getting your accountant to do it each year.
Yeah.
So yeah, I guess the ATO says so, and when the ATO says so, we listen.
Exactly. Um, so yeah, and I suppose that answers the question of like why doesn't an accountant look after the depreciation? It's like so other things. So and I think this is something that oftentimes people can get a bit confused with is you might have an investment property and there's tax depreciation for the actual construction of the building and for the like the fittings of the building, but you might have an investment property that say you've got a fridge for or a washing machine for or things like that. Those pieces might not be included in the calculation that we're talking about right now, and those parts of the depreciation might be done by an accountant. But like if you buy a new washing machine throughout the year or whatever, for your investment property, if it's part of the lease, but yeah, I think it's really good for us to like distinguish the difference between like what we are actually depreciating when we're talking about this for investors.
Yeah,
Mm,
100%. And yeah, like it's on the actual, construction of the building itself. We do include appliances, and like white goods and like fixtures and fittings. Sometimes if people are renting furnished, we always ask if they're wanting to include the furniture within the report. You know, some people want to include the furniture, some people want to do it through their accountant. And if there's things that we can't claim on, like repairs and maintenance, which is more an accountant's realm, we'll let them know of things we can't claim on from a depreciation standpoint that their accountant can. So we kind of work hand in hand with the accountant. We're kind of like sister teams on the landlord side.
yeah, yeah. So, so I think we've discussed all of that. Like, what happens if you've got an investment property, you've already done the BMT tax depreciation, but then there's a big renovation that we need to do. Do we need to go through the whole process to get an updated schedule and like and make sure that that's all happening as well?
Yeah,
Or
I
yeah.
understand what you mean. So we don't actually, like 99.9% of the time, we don't need to reinspect when we're getting the report updated.
Mm-hmm.
If it's an owner's first update to their depreciation schedule, they can update the first couple of items free of charge. From there, it's sort of quoted case by case, but it's usually
Mm.
like $100 or something like that.
Yeah.
But all we need is really the costs associated with the different assets and the completion date of the works, and we can get it updated. We don't need to re-inspect or anything like that.
Yeah.
And we can get, takes about a week to update, just in office, and then we get it
Yeah.
sent across once completed. Yeah,
And
but
it's
unless it's
updated.
sort of like often, unless it's like pretty much gutting the property, or if it's a knockdown
Yeah.
rebuild, that's very often the
That's
only
when
time
it
we
would
need
be
to
the
sort of
difference.
inspect. Yeah.
Yeah, cool. So, so the site inspection would only be the first time that you guys do the depreciation schedule, unless,
Yeah.
like you said, it's a knockdown and rebuild.
Yeah,
Yeah.
yeah. Unless it's, yeah, like you said, unless it's a rare circumstance, yeah, nice and easy
Yeah.
to update that.
Perfect. Perfect. Now, what about, so is there a difference for residential versus commercial property? So some of our investors are commercial property investors. So what would be the difference there? Like, is it
Yeah, so the difference between, I mean, residential versus commercial, there's a few differences. There's differences in sort of like legislation that affects residential versus commercial.
mm-hmm,
The thing I mentioned about secondhand properties for residential doesn't apply for commercial properties. So while for secondhand properties that are residential, some assets might not be able to be claimed.
mm-hmm,
With a secondhand commercial property, that's not an issue at all. They have different rates of depreciation as well, depending on the industry. And sometimes even just within one industry, one asset might have a different depreciation rate depending on where it's located. Like carpet in a pub has a different depreciation rate if it's in the actual bar area as opposed to like the dining area.
oh
Um,
wow,
yeah,
that's so
100%. So
fascinating.
yeah,
Yeah.
it's little things that you don't really think about, but then you go, oh yeah, you know what? Carpet in the actual bar area where drinks are going to get spilled, that's probably going to get worn out a bit quicker than that of when you're sitting down having dinner.
Yeah,
Um,
wow.
we go in and we take into consideration those aspects. Often when they do the budget, like they announce the budget each year, there
Mm-hmm,
might be changes surrounding depreciation. So there can be things for small business entities versus medium business entities. And one thing that's come up a few times is farms and agricultural producers,
mm,
so primary producers, they can have different depreciation rates for different years as well. So depending on when they've owned a property and when it's been a rental, we'll break it down to be affected by the correct legislation for each year.
yeah,
Um,
cool.
yeah, so it gets a bit more complicated, but there is
Mm-hmm.
also more deductions often for commercial because they have a
For
higher construction cost.
yeah, yeah, cool. And also a higher, like some, like you were saying, some things have a higher use rate.
Yeah.
Yeah, amazing, amazing. I'm really glad that it's you guys that are doing all of those calculations though. That sounds very complicated. So, and so if I was an investor and I was thinking about buying property, like what should I be thinking about when it comes to depreciation? So if I had like maybe I might have two or three investment properties to look at, or all at the same price, what
Hmm.
would you go is like, well, this one here would be the better purchase?
Yeah, a great sort of tool that we actually have available on our website is called PropCalc. So essentially what that is, and it's something that I've often recommended to people if they are, either looking to expand their portfolio or, they're just trying to weigh up a couple of different options. What it allows you to do is take different like potential investment properties and can compare them side by side.
Oh,
You
amazing.
can take into consideration like what the purchase price is going to be, what the potential rental yield is going to be, and you can adjust. It'll pre-fill it, but you can adjust it for different figures. So where you can change what maybe your mortgage return is going to be, what the rates are going to be for you, different things like that. So that way it'll show you the after-tax holding cost of a property.
Yeah,
Obviously, it
right.
is an initial estimate, but if you are trying to, weigh up different options there, or you're getting into investing for the first time and you're trying to figure out what is going to be the best if you're wanting positive, negatively geared, whatever it might be. PropCalc's great because it allows you to take that information and review it rather than having to get that pressure when you're in the room there
Yeah.
with the sales agent sometimes and you get a bit anxious.
Yeah,
I know I
yeah.
do.
And also like, so say you've got three properties, they're the same price, they're the same mortgage, same rent you're going to get, but one's going to be a newer property than some of the other two.
Sure.
Like that would really change potentially how much depreciation you would get because it's a newer property. Would that
Yeah,
be right?
it can. So a brand new property, you can claim on like all aspects of the property for investment or for depreciation. If a property is, purchased secondhand or the owner's lived in it prior to leasing it out, some things like I mentioned, like things like the fixtures and fittings, things like blinds, carpets, appliances, we wouldn't be able to claim upon them unless they've been installed by the owner for the purposes of rental. So that's something that we take into consideration and could be good for investors to think about if they're thinking about the investment from a property from a depreciation standpoint. A brand new property is going to have high deductions, at least for the first 5 or so years, than say a property that's purchased secondhand or that's lived in prior to leasing it out. Yeah, and the
Okay,
newer the
cool.
property, the longer you're going to be able to claim for.
Yes. So, and the more deductions you'll have over that time.
Yeah.
Yeah, cool. So, what could an investor do? So, say they've already invested, and then they're here and they're listening to this and going, "Oh my goodness, I didn't know I could potentially get depreciation on my property." What's available to them? What can they do?
100%. So they can reach out to us through the phone, through our 1300 728 726 number. And we can also, through email as well, reach out to us or through our live chat or through our website to organize a depreciation schedule. Like I mentioned, we'll go through some very simple details and then we'll take care of all the hard work. But that way we can give them at least an estimate and a quote so you can make that informed decision, which I think something that we're all about is that knowledge is to be shared, and we want to make sure people are able to have the knowledge and the information to make that informed decision about their future.
Yeah, cool. Sounds like if they're not already depreciating, it's worth the conversation anyway. So
100%. Always best to ask.
yes, like your mama said. Yeah, cool. And I suppose like to find out whether or not a depreciation schedule is worthwhile for them, it's the same thing. They call that 1307.
1300 728 726.
Yeah.
But I'll have all my details sent through as
Yes.
well. So that
Yes.
way you don't
Perfect.
have to remember this
Yeah.
number that I'm just giving you here and now.
Yeah,
I'll
yeah,
have all
cool.
the details sort of emailed through at the end as well to share.
Yeah. So I know that you've got some slides for us and like hopefully this has been a really good conversation for everybody. But maybe we could have a look at those slides and go through an example. So I think you've got an example there
100%.
that we can use.
I'll get that shared on Memento. Where is it? There it is.
Hopefully I haven't accidentally switched that button off.
So I
Perfect.
think it's shared there now. People can see.
Yes. Perfect.
Wonderful.
Thank you so much.
No, that's okay.
Yeah.
I will sort of pop through it and show sort of the example of sort of how it's working there. So this is, I guess, like a case study of how the depreciation schedule sort of works. This option we have here, it's also based off, previous reports we've had completed.
Yeah.
In this case, for the property here, we're going to look at like a brand new 4-bedroom house. For the purchase price, 820,000, rental of 700 a week. So an income per annum just shy of 37,000. And then the expenses each year as well of 50,000 or just over. So for these landlords here, they're looking at before they do their, tax return, that the holding cost for the property for them every year is costing them $13,800.
And those expenses, that's like their mortgage repayments. Is that including the tax depreciation, or that hasn't got that yet?
That's not
Yeah.
including any depreciation yet. That can be things like, other sort of like fees to do with the property, be it, rates or property management fees, all sorts of different things that sort of fall under that umbrella of to why you might be paying more for your investment property than necessarily getting back.
Yeah.
So in this case, let's say that the investors haven't yet got their depreciation schedule. But like those figures I mentioned of that 36,000 per annum for income and 50K for expenses, and the cost or deduction for them is 13 and about 13 and a half, just short of 14. So for this sort of example, I'll just assume that they've got like a 37% tax rate. But in this example, without the depreciation schedule, they'd be getting just over $5,000 back as a refund, bringing down the holding cost to about 8,600 a year or 160 a week, which, it isn't too bad.
It's not too bad.
Not too bad, but we can do better though. So when they get the snazzy depreciation schedule, the 3 numbers there at the top, the income, the expenses, the loss, still the same. But for this property here, they're able to get a depreciation claim for their first year of 16,500. So that means that their total tax deduction now is going to be 30,300. And again, with the same sort of tax rate, their refund's going to go and jump from 5,000 to 11,200. And that's bringing the cost down to $50 a week to hold the property, or like just over 2,500 a year. And look, I don't know, I can't speak for everyone, but if I found a $50 note sort of sitting in a puddle or in the gutter in the street, I'd definitely pick it up. And I think it's really important because that can be $50 a week they could be putting into, say, paying off their mortgage. It could be $50 a week they're putting towards saving for their next investment property. Maybe if their property manager told them about depreciation, they might spend $50 on a nice bottle of wine for you. We can dream. But yeah, it's a big difference there. And every bit adds up. Yeah.
Definitely. So, and this is a perfect, clear example of why getting a depreciation schedule that is properly done by experts is how you could get a really good claim potentially from your business, from your investment property against your like if you're a sole trader, against your sole trader income, or if you're a salary and wage earner. Like it's really handy to actually understand that, if you are going to do investment property as a strategy to either build capital or build extra income, having the depreciation schedule is really important for that.
100%.
And even if the property is positively geared, so it's making money, having that depreciation schedule could potentially make it not be making money and still get you a refund. So it's like from a tax perspective.
Exactly. From a tax perspective, it's helping to claim more so that when it comes to tax time, it's less income. You're producing less income than what you want the tax to show. So that way you're going to get a better return.
Yeah. So it sounds like it's a win-win situation. Is there anything else that we've missed, Maddie?
I can't think of anything that we've missed for a bit of a 101. But if there is any questions that anyone has, if they want to ask me now, or if they want to reach out to me afterwards, I'm more than happy to sort of go over them as well.
Yeah, sure. So we'll open it to the floor. If anybody has a question, you can unmute yourself and then just go ahead and ask. You must have done an amazing job.
I've done my job. I've
I
made
think
sure
you've
everyone
done your
knows
job,
everything.
Maddie. So yeah, well, I really do hope that this crazy season that you'll be coming into of getting lots of those depreciation schedules done, I hope it goes very smoothly for you. So
Thank you.
yeah, and for our clients as well, BMT's been really amazing, and they've created a you can come straight onto our website. If I can just find where I've got it. I had it open for a little minute. Clearly shut it down. Let me open a new tab somewhere. And so you can come onto our website, and I'll just quickly show. So if you do that, and it's this website. So if you come onto our website under resources, BMT has created this amazing investor calculator. So you can actually do this calculator here, and it also gives you the details, the phone number to call, so you can get a hold of Maddie and the team. So
Nice and easy.
yeah, so it's super easy. You come onto our homepage, go under resources, investor depreciation, and then ta-da! So, which is an amazing resource that I'm so incredibly grateful that BMT's created for us. Otherwise, I hope you all have a really awesome afternoon. Thank you so much for joining in. And for those of you that signed up and couldn't make it onto the call, we will be sending the recording your way as well. So thank you so much, Maddie, for all
Thank you
of
for
your
having
assistance,
me.
and yeah, it's been lovely to chat with you.
Same with you. Have a good one. Bye,
See you,
everyone.
everybody.